American Express reported earnings for the fourth quarter this morning. They missed estimates on the top and bottom lines. The financial services company did issue some stronger than expected guidance, though, for fiscal year 2023. They expect revenue to grow, and we're going to be taking a look at some of the figures here in a moment. Commercial services, that was up 15% from a year ago during the quarter. International card services, that also jumped year over year, but it was significantly impacted by the strength of the U.S. dollar, they did note. And it was actually global merchant and network services that grew 20% in this quarter, too. You actually spoke with the leadership there, too.
Yeah, I caught up again with Amex CEO Stephen Squeri, head of our show, noting he's not seeing recessionary signals. I go deeper in this in a story on the Yahoo Finance homepage now, but nonetheless, no recessionary signals for him. Kind of fits well with what we heard, from Visa and MasterCard, which we'll talk about in a second here. Saying travel bookings are up now over 50% versus pre-pandemic. Overall, good quarter, but I think the stock is ignoring this earnings miss and really locked in on this guidance outlook from this company. The earnings were meaningfully above consensus estimates. To call out 15% to 17% revenue growth when we're seeing a lot of layoffs in the tech industry, a lot of those Amex cards might be getting put away because those employees are no longer working with the company. An interesting outlook for the company, a very bullish outlook, and the street appears to be paying more attention to this.
I mean, what's interesting to me about all three card makers, which have now reported, all of them saw volumes that missed estimates. All of them saw volumes increase, that is, spending on their cards increase, but all three of them missed estimates. So spending on Visa cards rose by 1.7% to about $3 trillion. It's the biggest. MasterCard's spending rose 11% volume to $1.73 trillion, and Amex was up 12% to $413 billion. And again, all of these numbers were below what analysts were estimating, which is especially interesting given, obviously, prices are rising. We did just get those personal spending numbers from the month of December that showed a decrease, so perhaps that's also sort of reflected in some of these numbers. That said, you know, when you look at how these companies did, even with those spending numbers missing estimates, things like the outlook even came in rosy here.
Both of them mentioned in January, and Citi highlighting some of these trends here. MasterCard noting that switched volume month to date so far in January up 21% year over year. That's
what is switched volume?
Just the volume going through their network, which doesn't appear to be recessionary to me. And Visa, U.S. payments volume January month to date up 14% year over year. So pretty good, all things being considered.
You know, here's the thing that I'm really looking at right now is where they're investing. And for each of the card companies here, Visa, MasterCard, and of course, American Express, more on the corporate side. When you think about the amount of travel that's reemerged, all of them pointed out travel in one capacity or another, whether it's corporate travel or leisure travel. And one of the big investments that we heard about from MasterCard particularly, and this is based off an acquisition that they made, I believe in late 2020, is really looking at this no card present type of transaction. And that's huge because it's basically saying, all right, I'm just going to tap to pay anywhere, or I've already got my credit card data scored.
And so you can payment from
exactly. And so if you're tapping for those payments, then they're looking across where that actually generates a different virtual card number. And that virtual card number business is one of those opportunities that MasterCard's going to invest even more in, especially as you do have even more of this reemergence eventually of global travel, but then additionally just more of the no card present type of transaction. That's everything from your DoorDash order all the way to you doing some cross-border travel perhaps as well.
Well, and I guess also shows that even in a sort of a fintech digital world, these guys, you still need these guys.
Random nugget. My time with Stephen is always very brief. 10 minutes on earnings day. But I did manage to ask him, I never asked him before, what it means to have Warren Buffett as your largest shareholder. A little question outside of earnings season. Of course, Berkshire Hathaway owns, I believe, close to 20.3% of Amex, longtime holding. He says it's akin to the good housekeeping seal of approval, which is really, he said, also energizes everyone in the company. Pretty cool.